Hello everyone, my name is Dhamija. I'm a full-time derivatives trader, investor and a mutual fund specialist. I left my corporate job 5 years back and I am a full-time derivatives trader, as I said, financially free, and I make videos to help people navigate the financial markets, especially stuff related to the markets and investments. So let us begin today's video. Today's video is going to be very interesting. It's about the price of gold and silver. More specifically, we are going to focus on the outlook for both these precious metals. There was a big rally that happened in the month of September, October, wherein these metals actually blow through the roof. There were physical shortages that were reported all around the world. Even in India, we saw that silver had a lot of physical shortage. The ETFs went into complete premium and they were trading at almost 25% higher than the spot price at one point in time. And then, slew of measures were taken, and this was not only limited to Indian markets but also international markets. So what actually happened was that there was backwardation in LBMA. Now, for some of you who might not know what backwardation is basically when the price of physical silver, which is traded, becomes higher than the price of future silvers. Now, typically that should not happen because there is storage cost, there is insurance cost, etc. So anything that you want in future should be higher than the current one. But when there is a physical shortage, then typically backwardation tends to happen. So backwardation happened in the month of October and November, and that was actually also seen in the Indian shores, wherein a lot of these ETFs, silver ETFs specifically, went much higher than what their underlying price was. And some of the actually AMCs also stopped taking in fresh new investments into the mutual fund schemes which are dependent on the ETFs. So now all that frenzy is gone, and then from there silver actually corrected 25-30% simply because it had to come back to the spot prices. The spot prices also fell in the international market. So the spot prices had gone to as high as $54 in silver. They went down, they went to about 47, also 46 point something. So there was a huge crash over there, and then this premium also vanished in the Indian market. So that is why the elevated fall has been seen almost to the tune of 30-35% from the top which was made. And the same was the case with gold. Gold though did not have any premium in it, thankfully, but the gold prices also sharply fell from highs of $4,400 to an ounce. It fell to almost 3,900. So there was a sharp correction in gold also, and the same was also seen in the Indian markets. But now all that has stabilized, and we have seen that gold has actually climbed back to 4,000 and silver is climbed back, almost it climbed to 50, but now it is trading at about $48. So there is some semblance of a pullback which is coming in these two metals. And what is the outlook? So there are a lot of these brokerages firms which are telling about the outlook of the silver to go to as high as $60, $70, which would mean a huge at least 20-50% higher prices than what they are over here. Same is the forecast for gold. So some of the international brokerages have pegged gold to $5,000. Now, if we are trading at 4,000 and supposing we have to go to 5,000, now that straight away is a $1,000 increase on 4,000, which is about 25% increase straight, and not to account the dollar increase that happens over INR. So typically what happens is that INR depreciates about 3% to the US dollars. But last year, in spite of the dollar going down, INR has depreciated by 5%. So there is that additional factor that comes in terms of the returns as well. So 20% is the projection plus 5% if you take dollars. It's a 25% upside even from these levels is what some of the brokerages are saying. So should you invest right now? That is a big question. So I am going to address all those things with facts and figures in today's video. So please see this video till the end, and please do subscribe to my channel. Also, in case you're interested to build a mutual fund portfolio, then you can contact me through the Google form in the description below. I'm a mutual fund specialist. I help people build very strong, robust mutual fund portfolios. They are equity based, they are debt based, they are gold and silver based. So for a complete understanding, evaluation of your portfolio, kindly contact me. Even if you want to get your portfolio only evaluated, it's again free of cost, and also the building of the portfolio is free of cost. So just in case you're interested, please do fill up that Google form. So let's begin today's video. Let us begin the video with the chart, firstly I'd like to show you what this is a very good site. This is called IBJA, Indian Bullion Jewelers Association site. So this is the site which tells you about what is the price of the gold and silver. So as you can see, indicative retail selling price for gold and silver today. So 14 carat gold is selling for about 7,700, 18 carat for 9,700, 22 carat for 11,000, yeah, 11,722, and fine gold, which is 999, is selling for 12,000 and 010. So if you convert these to 10 grams, then you will get 10 gram price for 999 at 1,20,000. So this is the chart which is showing the correct prices. So this is, as you can see over here, there is a AM and PM. So AM is the morning price, PM is the evening price. So these prices were taken, let's say, on the 7th, and that is why they are showing the 6th prices, and after that there's been Saturday, Sunday, so today is the 9th. So if you see the last trading prices is for gold, it is showing as 120, as I just mentioned to you. For silver, it is showing as 147,358. This is for a kilo, and these are all 999 purity. So this is what is basically traded also on the ETFs, and this is the correct price. So anyone who is interested, they can go on to this website. It's a very good website which tells you the exact rates which are there in the market right now. Now let us come to the charts. Now let us look at the charts, how the charts are behaving. This is the silver chart, and what it is basically showing is that silver in INR. Okay, so what this is basically showing is, just give me one sec, let me just check. Yeah, this is silver in Indian rupees. So what this is showing is the movement on a daily scale, and as you can see that from 20th of August is when the real rally started in silver. So silver was trading at about 1 lakh around 20th of August, and from 1 lakh it straight away jumped to 154. That's a 50% jump in less than like 3 months. So whenever these kind of parabolic moves come in, then you know that something is not right in the markets, and a lot of this was driven by international prices. And from there, as you can see, we have corrected from 150, we went down to as low as 128 also, and now we are somewhere stabilized around 136. So this is the power of the rally, and a typical retracement has happened. And sometimes when retracements happens, it's actually a good time to enter, because if you're trying to catch the rally, and if you would have entered somewhere over here or here, then you would have suffered some big drawdowns. But whenever you buy during a pullback, it is always better, because you get that margin of safety. Now let us look at the chart of gold as well. Now gold, as you can see, again similar observation. So gold actually started its rally somewhere in April, from April to somewhere in August. It was actually consolidating. So if you see, this is the period when the consolidation of gold was happening, and after that, so this is the time when typically gold actually broke out for the first time. But after that, it went into consolidation mode for 3-4 months, and after that it has just taken off. So that's last phase has been the vertical phase, wherein actually gold went from somewhere around 92,000 to about 1,23,000 per 10 grams. So that has been the spectacular run in gold also, though this time silver has basically beaten gold, and from there gold corrected. So you can see that whenever these kind of sharp corrections come in, so let's take it in the let's take something in the past as well. So did we see such sharp corrections in the past? Yes. So somewhere over here we saw from April to May, the gold actually fell down, and then the similar correction was observed from June to July, and after that the correction has now come in. So anyone who did not buy previously, was not able to buy after August, because there's just been no correction. This is the first big correction that has come in gold, and it is perhaps as good as a time as any to consider it. Now let us look at this. This is a very important chart. This is basically a gold to silver. Sorry, this is the gold to Nifty chart. Okay, now what basically this indicates is that how gold has behaved with respect to Nifty. So there are times when this particular chart shows that gold has been doing well, while there are times when Nifty has been doing well. So if you look at this, these are the peaks that were made by gold. So gold made a peak when equity markets went down. So gold made a peak at about 16.1. Okay, and then the equity market started to do well, and gold actually fell down to about 7.4. Now that ratio has again gone up. Why is that ratio gone up? Is because last 1 year Nifty has not been doing anything, whereas gold actually has been doing very well. So now this ratio is somewhere around 13, 14, which is on the higher side, I would say. So perhaps, you know, this also indicates that there is a chance that equity markets also might outperform the gold from here on, and it is quite possible because our markets haven't done anything for the last 1 year. So, you know, these are typical cycles that happen when sometimes gold does well, when sometimes Nifty will do well. And hence, it is very, very critical for you to have an allocation to gold in your portfolio as well. So what should your portfolio consist of? It should consist of equities, it should consist of debt, which is fixed income, it should consist of precious metals, which is gold. It may or may not have real estate if you are keen on that one. This is how a well-rounded structure, and sorry, one more, international should be there in your portfolio. So this is how a typical good portfolio looks like. So let's leave the real estate part of it. Let's talk about the financial assets over here. So gold, silver, equities, fixed income, and international, these should be part of your portfolios. What should be the allocation? Again, depends on what the valuations are, what cycle you have been. So typically, if a asset classes run up a lot, then, you know, as it is, the portion of percentage in your portfolio will increase, so you might have to tone that down. So the asset which is priced lesser should be added more. So this is the kind of typical strategies that we follow when we are building our portfolio. For me, for myself, for my clients, this is the typical strategy that we follow. And, you know, such rebalancing actually helps you increase the long-term return. So it's not that, oh, I bought it and I've forgotten about it. Great, you bought it, you're a long-term investor, good, but please keep an eye out on asset allocation as well. That what is the percentage? Has the percentage gone up? Then should I invest in some other asset, and so on and so forth. Now let us look at another interesting chart. This is the gold to silver ratio. Yeah, I'll just check. Yeah, this is the gold to silver ratio. Now, if you see, gold to silver ratio has basically earlier, this is a monthly chart. So you can see in 2011 when silver actually ran up a lot. So gold to silver ratio came down to as low as 30. And when gold ran up a lot, this was when the silver was actually at the bottom. It went to 126. So now somewhere the new normal between gold to silver is somewhere around between, I would say, close to 60 to 100. So we are somewhere in the middle right now at 80. Now, why is this the case? You might argue that, you know, actually, if you see silver to gold ratio, if you see in terms of the abundance and what it's being mined right now is 1:7. So one part of gold comes out of the earth, so 7 parts of silver comes out. Earlier it used to be 1:32. So this has typically been the ratio, you know, 30, 40, 50 in the earlier times as well in terms of the price. But now that has got completely skewed towards gold is because of central bank buying. So central banks are not buying silver, they have been buying gold. But the difference between gold and silver is that silver has got industrial application as well. And in one of my previous videos, I had shown how silver actually demand is outstripping the supply. So in my opinion, this ratio should come down. That would mean that price of silver should actually do well going ahead as well. But not to say that gold is going to be left far behind. So it is going to be a very interesting thing to see going ahead, because gold is frantically being bought by central banks, and there is no way that you know, anything can match this kind of central bank buying that is happening. And with the de-dollarization that is happening, and with the geopolitical wars that have been happening, and so on and so forth, gold's demand is just going to increase. So you know, it's a very interesting ratio. If both the metals go up, then this ratio might hold, but otherwise it also shows that you know, where we are in the ratio between gold and silver. Now let us look at what is happening in the international market. So this is what I wanted to show you. This is an interesting chart. Basically, this shows you the price of silver. So you can see the price of silver is 48.143, whereas the price of futures, the price of spot is 48.3. So basically what has happened is that the price of futures, which is 48.1, is trading lower than the price of spot, which is 48.3. So the backwardation has come back, though the backwardation is not so high. It had gone to, if this was 48, this was 50 earlier. Now there's a 0.2 difference, which was earlier a $2 difference. and gold actually has gone to 4,000. So gold has reclaimed back 4,000. If you see USD-INR, this is an interesting one. Why I'm showing this is because, again, price of gold and silver depend on how the USD-INR movement is going to happen. So if you see USD-INR in the last 1 year, USD-INR has actually depreciated by 5%. That means USD-INR has gone up by 5%. In the last 5 years, it has gone up by 20%. So every year 3 to 5% our currency is depreciating against the dollar, which is not good in my opinion, but this is how it is. So that also basically means that gold and silver will act as a currency hedge for you as well. So this is one very important thing that a lot of people miss out on, is that, let's say, if you don't have any international portfolio, if you don't have any international assets, then how do you protect yourself against the currency depreciation? So we have seen in a lot of countries the currencies actually go into free fall. Thankfully, in our country that's not the case, which is good, but still there is a decline that happens in our currency every year of 3 to 5%, and that is basically because of other reasons like inflation difference and so on and so forth between us and the developed markets. But having said that, if our currency is going to depreciate by 3 to 5%, then what is the hedge that you have? So gold and silver become a good hedge over there, and they will add to your returns whenever the currency is depreciating. So now coming to the forecast, so Bank of America lifts 2026 forecast to $5,000 an ounce for gold and sees silver at 65. Now from here, this is what I had actually told you earlier. So silver is trading at 48, so 65, you can do the maths, and gold is trading at 4,000, so that's about 25% plus add 5% to the currency. So it's like a bullish scenario that is being painted. Even back in India, Motilal predicts 2.4 lakh silver target by 2026. So these are all brokerages reports that have been coming out, from time to time, which are basically indicating that this rally might not be over. It just might be a pause. And in any case, in the long term, if you see the gold CAGR is almost 11 to 12%, which is comparable to equities. So someone was showing me that, compare it last 10, 15 years, gold has actually outperformed Nifty. It's quite possible. And, there were schemes like 2.5% extra of the gold bond scheme, which was there by the government. It was a no-brainer. If you would have invested in it, imagine 9-11% return of gold, 2.5% on top of that. It's unimaginable the kind of wealth that instrument has created for people. I had lots of it. I pared it down simply because it had gone into complete premium. So I sold that and I bought gold ETF for my personal portfolio because the premium was too huge, and now the premium is corrected. But otherwise, that scheme was fantastic. And for viewers who are new, they will not know that these SGBs used to trade at a huge discount, even till as recent as about 2.5 years back. They were at huge discount, so you could get a SGB at 10 to 15% over the fair value, simply because there was less liquidity. People were not interested. So, from there, just imagine how things change. I remember long time back when I had first invested in SGB, it was about 8-10 years back. There was no liquidity, hardly anything. There was no buyers for it. Never used to trade on the secondary market. You would not find any buyers. From there, going into a premium. So see how things change. And I've been advocating SGBs for a long time, but not now, because all the premium has vanished. There are only very few SGBs that are left that have some sort of value on the secondary market compared to their fair value, but otherwise it was a beautiful instrument. So that's it. That's the update from my side on price of gold and silver. And if you're not invested, you should be invested. Please consult your financial advisor, and please get a proper outlook. But one thing, please be sure, please have a proper asset allocation mix. If you don't have that, it is very difficult to build wealth. As they say in finance, asset allocation is the only free lunch you will get, and it's so true. Money is 90% built by asset allocation, not by one particular. So you would have heard very good stories that, oh, X investor bought one stock, it became 100x. All those stories are good, but for normal retail investor, asset allocation is what will make you money in the long term. So be sensible. Please invest properly through mutual funds, through ETFs. Don't try to get into direct stocks. Have gold and silver in your allocation. Have some fixed income. Again, now what kind of fixed income you should have. So again, if you want, you can consult me. I'll be very happy to help you on that as well. And take advice and then plan your portfolio journey, because it's a long journey. And if you get the things right, you can make a lot of wealth. So that's it from me now. If you like my video, please do subscribe to my channel. I keep on sharing my insights. And please do share this with your friends and family if you found this to be useful. That's it. Take care. Bye-bye.